Welcome back, everyone. Today, we're diving into a financial anomaly that's, frankly, mind-bending. We're looking at the first quarter of 2026, a window where the venture capital tap didn't just turn on, it completely flooded the market. If you want to know where the future of technology is heading, you kind of have to follow the money, right? Well, the sheer volume of money we're about to unpack is literally historically unprecedented.
$300 billion. Just let that number sit with you for a second. According to Crunchbase data, that is the staggering amount venture capital investors deployed into startups globally. But here's the absolute kicker. That wasn't over a decade. It wasn't even over a year. That $300 billion was deployed in just the first quarter of 2026, a tiny 3-month window. We're talking about an ocean of capital flowing into private markets at a speed that has left economists totally stunned.
To really wrap our heads around the scale of that figure, we have to look at the year-over-year comparison. This massive deployment of capital represents a 150% increase compared to the exact same quarter last year. A 150% jump. I mean, in the mature world of global venture investment, you usually expect what? Single-digit growth? A 150% vertical spike indicates a fundamental tectonic shift in market behavior. Investors aren't just cautiously placing bets anymore. They are sprinting to allocate capital at a record-shattering pace.
Section 1. AI takes the lion's share. Let's break down exactly where this unprecedented flood of capital was actually directed.
The reality of this 2026 market is highly concentrated. AI-focused companies captured a whopping 80% of that $300 billion. Let that sink in. Every single other technology sector combined, software, fintech, health tech, consumer apps, they were all left fighting over that remaining 20% slice. Artificial intelligence essentially acted like a supermassive black hole, pulling in almost all the available global venture capital. It's the largest concentration of VC money ever directed toward a single sector in one quarter.
Moving right along to Section 2, the historic mega rounds. Let's zoom in from the global macro view to look at the individual giants. Get this! 4 of the 5 largest venture funding rounds ever recorded in human history closed during this single quarter alone. Think about all the massive, game-changing companies built over the last few decades. Yet the highest tier of capital raises ever executed were densely packed into these exact 3 months. It's just this incredible buildup of tension and momentum, with major players executing colossal deals all at the exact same time.
Let's walk through these giants side by side. One leading AI company closed a round exceeding $100 billion. And to be clear, that's not a valuation. That is the actual cash raised. It is the single largest venture investment in history, period. Right next to it, a second AI leader closed a round in the range of $30 billion, and a third raised approximately $20 billion. We are looking at nation-state level budgets being handed to private frontier AI labs in a matter of weeks. It's almost hard to comprehend.
And to round out this elite group of mega rounds, we can't forget about the physical world. A leading autonomous driving company also secured a multi-billion-dollar raise of its own during this exact same window. It perfectly highlights how this race to deploy AI isn't just about chatbots or text on a screen. It's heavily focused on navigating and interacting with the real physical world.
Which brings us to Section 3, the billion-dollar middle class.
Beyond those historic, top-heavy mega rounds we just talked about, 10 more individual companies raised at least $1 billion each. 10 different companies. You know, in any other era, a single billion-dollar raise would be the undisputed headline of the year. But in Q1 2026, it kind of just became a standard ticket to enter the playing field. The capital isn't just concentrated at the very top. It's incredibly deep, creating a whole new middle class of extremely well-funded challengers.
And just look at the diversity of where those $10 billion rounds actually went. We're seeing widespread, almost panic buying across all facets of the AI industry. We've got generative AI, physical AI and robotics, semiconductor design, data center infrastructure, defense AI, and autonomous systems. This tells us a fascinating story. Investors aren't just funding the software brains anymore, they're funding the entire supply chain. They're backing the chips, the massive data centers required to run them, the robotics to give AI physical form, and even defense applications. It is a massive, ecosystem-wide capital deployment.
All right, Section 4, shattering historical records. Let's zoom back out and put this single quarter into perspective. Based on Crunchbase's sector analysis of foundational AI startups, that single quarter of funding exceeded all of calendar year 2025 by roughly 2 times. And when you compare it to 2024, Q1 2026 is nearly 5 times larger than that entire year. Think about that. 5 times the capital of 2024 squeezed into just 3 months.
This is an exponential curve literally playing out right in front of our eyes in the financial markets.
Section 5. Rational bet or speculative bubble. Let's talk about what this actually means for the market.
This scale of capital concentration has absolutely zero precedent, and it's fiercely dividing market analysts into two camps right now. On one hand, you have folks who view this as rational, long-term pricing. Their argument is that AI's transformative potential is so absolute, so inevitable, that injecting $300 billion right now is a completely logical investment in future infrastructure. But on the other hand, the contrasting perspective views this as a classic speculative cycle, a massive hype bubble building toward a really painful correction. It's fascinating because both views are currently debating the exact same record-breaking numbers.
So, how does this debate actually get resolved? What breaks the tie between rational bet and speculative bubble? Well, the truth is ultimately going to be revealed by one simple, undeniable metric: auditable financials. The deciding factor here is whether the massive productivity and revenue claims attached to these historic investments actually start showing up on the balance sheets in the coming quarters. These frontier labs have raised the capital. Now they have to prove they can generate the unprecedented returns required to justify those $100 billion checks.
Which leaves us with the ultimate question. Will the revenue match the historic hype? That is the multi-hundred billion dollar question hovering over the entire global economy right now. The capital acceleration of Q1 2026 has set the stage, the money has been deployed, and now the whole world is watching the scorecard. You're definitely going to want to keep an eye on those earnings reports because the answer to this question will undoubtedly define the technology landscape for decades to come. Thank you so much for joining me on this explainer. Keep learning, and I'll see you next time.